Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, here we are, Jim. It's Friday, and it's good to be with you.
Industrial commodities have taken a pounding, especially copper. What's the story there?
Well, we were earlier in the year where, everything got hit with, when you had the stock market high in January and many things got hit. And then out of that, we figured that industrial commodities could rally out until around May. There's sort of seasonal influences and things like that. So we did get that, and you've had copper. Well, it rallied up. Well, actually, in the base metals, in April, all of a sudden, like nickel and aluminum and those ones did straight up, and then straight down. And then copper did one of those just recently when it jumped up to $3.32, and then in a few weeks' time, right down to $2.72. So it gave up about 60 cents, which is a fast move. And then looking at the base metals index, all of them have hit. So and this has been weak in the last week. And with this, the U.S. dollar wasn't particularly strong in the last few weeks. So it's something going on in the metal prices themselves. And it was fine for us because we figured that somewhere after whatever they got to in May, they would head down, and more particularly later in the year. The other one that was very strong was lumber, and it just flew and became exceptionally overbought. All of our, as I've written it, bells and whistles went off on lumber, and it has been breaking down. So you have the base metals, and you've got lumber that have turned weak, and then also seasonally, these can be weak later in the year, which is going to be interesting.
Bob, they call it Dr. Copper because it seems to indicate how the world economy is doing. Does this show a downturn?
Yeah, they say that copper is the metal with the degree in economics. And, industrial commodities go up with an economic expansion. We've had that, and then heading down is a sign that the demand is weakening. And the other thing is that when you have commodities going down, particularly the industrial commodities, that's part of the business cycle. And when these prices go down, people may not be directly dealing in them, but when the basic industrial commodities go down, it reflects weakening pricing power right through much of commerce and industry. And then the importance of that in this kind of a market is you've had a lot of reckless buying of junk bonds and a lot of reckless issuance of it. So then you need to have good pricing power to make good earnings in order to service your debt obligations. And when pricing power goes away, your earnings go away, and it's tough to service the debt. And then the next step on that one is that the credit rating agencies like Moody's and Standard & Poor's and people like that, they then get very interested, and then what happens, it could be downgrades on your credit rating. So we've been on a long cyclical credit expansion since 2009, and it looks like it's getting over. So, and the other one with the favorable pricing in industrial commodities, as I said, there's been a terrific market for low-grade bonds, so that then narrowed spreads. So the credit spreads have narrowed until about 5 weeks ago, and then they're starting to turn around. As a matter of fact, last week we noted that on the turnaround to widening spreads was like the first breakout, which we take as a heads up, and but what will be concerning is when the second breakout occurs, maybe in August, but that was what happened in 2007. You had the first reversal in widening credit spreads in June, and then in August is when you had the second breakout, and the high for the stock market was in October, so it gave a good lead then. But if you go back to the dot-com bubble in 2000, the initial turn in the credit markets was more or less as the intense speculation blew out in that March. But then you still had the second breakout in credit spreads in September, and then that was pretty close to when the rebound out of the first hit after the March high in 2000, then it started heading south. And so it's a lot of it's tied to the credit markets, and also that ties to industrial commodity prices.
We'll have more with Bob Hoye right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead, zinc, silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Bob Hoye. Bob, what's happening in the grain market?
Yeah, well, the grains built a base 6 months ago, and we're recovering. And they reached a high here. Just a minute, I'll give that to you. In late May, that was also part of it. And the agricultural prices, they've now taken out both 50-day and 200-day moving averages, and are in a downtrend because they've taken out an important low in April. So it looks like speculation in grains is over. And again, the decline in the last 4 weeks has been without, the dollar did firm and rally, the DX, US dollar up to 95, but it's been sideways for the last while. So this is decline in commodities is serious. We take it as a warning on a potential credit contraction being more visible into the fall. You get seasonal on these on many of the basic commodity prices. The same with crude oil. So it's heading down. It looks like we're talking about a commodity market today, and between the commodities and the credit markets, let's call it a warning on maybe some problems in the fall.
We'll have more with Bob Hoye right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, the Chinese proverb, may you live in interesting times, also a curse. We are living in interesting times. If you're worried about where to go with your money and so make a little bit or at least save what you have, what should you do?
Oh, yeah. What one does, Jim, is look at the previous financial problems and what did the best. So if you go to cash, like Treasury bills, they could go back down to zero interest rate, so you're not going to get any money. The other thing is that if you go a long-term bond, even the government of Canada or long treasuries, that price can hit you. So the ideal thing is to go out 3 to 4 years where the term won't get you. And we would choose corporates, good grade corporates, because you get a slightly better yield than out-of-government bonds. And then for Canadians, we'd buy the U.S. corporates because the next leg up in the dollar could be quite spectacular. So it's a nice position, 3 to 4 year, good grade corporate bonds. It'll make you some money on the yield. You won't lose, well, it'd be difficult to lose on price because of the maturity. And then with the U.S. dollar, you would have a probability of a gain there. So a very nice place to be if you're going into a storm, and I think we are going into a storm. So,
Bob, thank you so much for chatting with us.
Well, very good, Jim. We've done it this week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for Bob or any of our other guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.